I'm Claire Zhang, Quebec Chapter Director at the Canada-China Business Council. The second panel, titled Canada-China Partnerships in Financial Services and Investment, focus on the critical role that financial services and investment play in strengthening bilateral economic ties. With Canadian and Chinese financial institutions active in both markets, there is tremendous potential for collaboration in banking, insurance, cross-border investment, and sustainable finance. With a strong representation within CCBC's membership, the financial service sector continues to drive collaboration and growth between Canada and China. Now, it's my great pleasure to introduce our distinguished speakers for this panel. Alex Young, Managing Partner and Head of East Asia Private Equity Group, Brookfield Asset Management. Chris Tavis, Head of Asia, BMO Capital Markets. Xiaoyong Wu, CEO and General Manager, Manulife Sinochem Life Insurance. As moderator, we are honored to have Graham Shantz, President of the Canada-China Business Council. Without further ado, please join me in welcoming Graham to officially begin the session.
Merci, Claire. It's tough to follow an hour about food, and I got 45 minutes for money. I ask everyone to come up. Thanks very much. I think if I wanted to highlight one thing about these three gentlemen's institutions, it's the age. I was thinking about this just a minute ago. I think all of your institutions are at least 100 years old, in general in Canada. Some of them, I'm thinking of 001 here, Scott. Bank of Montreal is what, 250 or so? So old, Canada's oldest bank, first chartered bank. Manulife in Asia has quite a long history, including in China. And Brookfield's 100 years old plus, I think, as well. So we'll focus a little bit on an area that probably of all the sectors in China's economy that has surprised me the most over 40 years of Canada dealing with Canada-China relations, it's the development of China's financial services industry. And we've got three excellent panelists today where we're going to delve a little bit into their respective institutions' interests in China today, where they've come from, and I'd like to talk a little bit about where they're going as well. We'll start with Brookfield. And Alex, if you want to maybe talk a little bit about what Brookfield is, and then move into your interests in China today. And then for a few minutes, and then Chris will ask you the same, and Xiaoyong Wu will ask you the same too. So we'll start with Alex.
Great, thanks everyone, and it's great to be here. For Brookfield, we actually entered the Chinese market around 12 years ago. For those of you who don't know us, we are a third-party money assets manager. We manage over 1 trillion assets globally. I think Blackstone and us were the two firms over the 1 trillion mark. So our assets in China runs across real estate, infrastructure, renewable, and private equity. Today, we have around 23 billion direct investment into China. I think as a percentage of that 1 trillion assets globally is a small percentage. But I would say the importance of this market is way more than that number. And that number has been increasing substantially. And on a relative basis, we're actually bigger than most of the peers in our space. The reason it's more important is because most of the business we invest in Asia, including the global business, they all have substantial presence in the Chinese market. And for example, we have a car battery business in the US, but they're also one of the top 3 in the Chinese market. So it's hard to avoid doing business here from portfolio management, assets management perspective. And the second fold is that we raised a lot of capital from the Chinese market, including Hong Kong. And actually, it's two of the top 10 investors are actually coming from China. And moving forward, we're also trying to be more local and manage RMB onshore in the Chinese market, which is a new trend. So we're actually trying to do more and more here. And even though we came into the Chinese market relatively late compared to a lot of the US peers, but our engagement has been moving really fast and catch up even more than most of the peers.
That's helpful, and I think when we come back to the round on questions, I've got lots of questions for you, Alex, too, including about recent developments in capital markets from inbound funds flow to acquisitions on the private equity side, dispositions, and capital market development in China as well. Chris, Bank of Montreal, you can give us a little overview on where you're at, the capital markets side, but also your bank here, and I think you have a JV as well, but over to you.
Yeah, thanks, Graham. BMO definitely is contributing strongly into the Canada-China financial connectivity. It's uniquely positioned as a bridge because BMO is the only Canadian bank with a locally incorporated subsidiary in mainland China, as well as its main offshore hub in Hong Kong, offering an efficient gateway to Canada and the rest of the world from China. Our platform allows us to combine Canadian market expertise with local knowledge, creating a trusted platform for clients navigating the global markets. A couple of ways in which we do this in particular, we support global clients here in China with our cross-border capabilities and existing trusted relationships with global corporations. We facilitate their business operations here in China with tailored financial solutions and localized support, which enables them to navigate some of the complexities of working in China. An example of this would be because China has a lot of strength in global supply chain and manufacturing, some of our franchise clients who have come here are really dependent on that theme. Examples would be commodities trading, fertilizer, auto financing, and such. The other way that we're interacting a lot is in helping Chinese clients looking to expand globally, or in particular, our strength in North America. BMO serves as a strategic advisor and financier for a lot of Chinese companies that are expanding into North America. In this case, our investment and corporate banking teams leverage our global capabilities and sector expertise to help Chinese clients move abroad. Metals and mining would be a particular example where we have global strength as BMO and where we're recognized as a leader, but many other sectors as well. One example is a leading Chinese nutrition manufacturer that was looking to pursue global acquisitions. BMO arranged credit facilities and to help them syndicate loans for their subsidiaries in Canada and the US, and help them deliver a financing solution for their global aspirations. And then the last way, or main category of activities that BMO does is, as you mentioned, our strategic partnerships. We've had a couple of in addition to our locally incorporated bank and also our investment banking rep office here, we have two strategic partnerships that we've had for 20 plus years with local institutions in asset management and wealth management space, in particular Kofco Trust and Full Goal. How those have worked really well is that we bring Canadian best practices in risk management and governance, and they're bringing local expertise and client base, and together we've built very strong companies. These partnerships underscore how Canada and China can collaborate really well and accelerate the asset management industry development. Among the 5 top mutual funds in China, 2 have major investors from Canada, including BMO's investment in Full Goal. So it's a very common activity and one that we've found very profitable over time.
It's a good, you're reminding me, I've often said when I was serving in Indonesia and China elsewhere, that in the case of particularly banking and insurance, we're exporting your capital, your institutions, but we're also exporting, in effect, Canadian regulatory systems, and as reflected in governance inside your respective institutions, which is valued in the market. Your one strategic partnership that you mentioned, the COFCO one, is something which you'd never expect if you were coming, you'd never see in Canada, that COFCO, a food importer, would have a wealth management arm. And it has significant assets, and it has certain advantages because of its, I presume, because of its nationwide presence from a distribution perspective. But it's grown quite significantly, I think, in assets under management. Is that right?
Yeah, absolutely. A lot of times these conglomerates here in China are set up with a number of different arms that we can connect with in a lot of different ways. So in particular, we started our presence with COFCO on the basis of a financial investment to grow an asset management element here in China. But there are other elements of that business partnership that have now kind of connected us even stronger to the benefit of our global clients, both clients here locally as well as clients abroad in North America.
And for Manulife, it's your journey to the license that you received in the 90s was I think a textbook of how you need to get into China to partner, to be persistent, and take a long view. I think your license was in the 90s, but it was a reflection of at least a decade of work to get in to obtain that license. But if you want to talk a little bit about the joint venture and how it's going and the background to it, that would be great. Thank you.
Thanks for the question. Actually, China represents one of the most strategically important and dynamic market for Manulife. In Manulife, we have two operations. One is life insurance, which is a joint venture. I'm the CEO of this joint venture. We call it Manulife Sinocon in life insurance, MSL. We are the first joint venture life insurance company in China. Actually, we are entering the 29th anniversary for this year. We are already be a well-recognized player in the market, have footprint in more than 15 provinces and 52 cities. We serve more than 3 million people already. So we are proud that over the past 30 years, we not only witnessed but also contribute to the evolution of China's life industry. In addition to the life insurance company, Manulife also have 100% owned asset management companies. So we are among very few foreign players that can have 100% owned asset management companies. So this gives Manulife a very key competitive edge, which means that we can provide our customer a more comprehensive or holistic solutions. It's bring us opportunity to have some kind of cross-sell. For example, you can have kind of joint customer activities or joint branding, and we can provide our customer not only the insurance product, but also like mutual funds and other financial tools to meet customers' various financial needs. So this brings Manulife a very unique value proposition.
That's a good introduction. I'm curious about domestic market developments, but maybe Alex, I'll ask you first on the institutional flow side. So I presume, I'm curious what the inbound flow looks like. Yes to private equity. Presume you've got pension funds, sovereign wealth funds that might want greater China exposure, looking for into private equity. You could also, if it touches into renewables or real estate, be interested in that too. And I'm wondering how that's developed over the last couple of years. That's kind of part one. The other one is the government of China has talked about the 15th five-year plan and announced, if I recall correctly, just a week or two ago, broad outlines on priority sectors. Do you think that influences what you're doing today? And do you think that's going to increase the flows coming in? And if so, how?
Yeah, I would say from investment perspective, the last 2 years, the Chinese market presents a very interesting timing. Because if you look at the FDI capital inflow into China, if I remember correctly, last year was around 115 billion, and the peak a few years back was 180 billion. So there was a substantial decline due to a variety of different reasons, as people know. Because of that, the valuation has come down quite significantly. So if you're a long-term investor, such like firms like us, if you're willing to take a contrarian view, this is actually a good time to invest into China. If you compare it to many other different markets, I think stock market in the US is all-time high. In the Indian market, everything's trading at like 30 times earnings at the minimum. And there's a lot of liquidity in Japan. But the fundamentals and demographics haven't changed a lot in the Japanese market. And so if you factor everything in, given the size of the economy, we haven't seen the valuation so attractive in China for the last 15 years. And from both private and public market perspective. So that's why we actually have been increasing the capital deployment in the Chinese market. But given, obviously, different asset class have different strategy, renewable infrastructure, it has a lot of needs domestically, not only because it's policy-driven, but simply because the renewable, you mentioned renewable, the cost of renewable power is actually cheaper than the traditional power now. And if you factor in the building time, building a solar panel farm is only like 6 months. But if you build a coal-fired power plant, it's going to take 6 years. If you factor that in, the renewable power is actually much cheaper. So I think that actually drives a lot of the capital inflow into that sector as well. So I think second part of your first question is about from the LP perspective. I would say globally, the LP base is more bifurcated. And if you talk about LPs from China, Middle East, and Southeast Asia, they're actually trying to rebalance their global portfolio by increasing the China presence because they were overexposed to the US market before. But if you look at some different LPs, they're trying to move into the other direction. So I would say the LP base globally is becoming more bifurcated, but there are still a bigger base trying to increase their China capital inflow. And that's why we're trying to innovate some products to tailor that demand and to set up a special vehicle for them to invest more into the Chinese market. I think to your second question regarding the priorities from the Chinese government, I would say to invest in China, you have to be on the right side of the policy, right? And because we're a long-term investor, we are very thematic driven. You have to bet on the end market's growth, which is highly linked to the strategic priorities set up in the 12 years plan. And just to give you an example on the reverse side, many years ago, a lot of people know that education sector was cracked down. I think a lot of people think this is because of different reasons, but the reality is it's a demographic issue because of the declining birth rate, et cetera. Raising a child is getting more and more expensive. That actually curbs a lot of the consumption demand. That was the priority, and the government issued a policy trying to cure that. And a lot of investors didn't follow that policy trend, and they keep investing, and that got cracked down and lost a lot of money. So I would say getting the priorities straight and find the right growing end market is highly, highly important, like renewable infrastructure and consumption-driven. And I think the panelists mentioned the manufacturing base. China is a big manufacturing base, and given the tariff situation, they're trying to rebuild additional capacity in other countries as well. And that actually drives a lot of private equity investment as well, because they're trying to be more global. they require operational help from global investors like us. That creates a very unique opportunity. I think just to summarize, I think the Chinese market in the last 2 years creates a very interesting opportunity for global investors. And have never seen the domestic markets is so favorable to foreign investment right now.
From a valuation perspective and expected growth as well. Chris, on deal flow, are you seeing things or how has it developed in the last couple of years? What's the BMO point of view?
Over the last little while, we definitely can see a continued business interest in cross-border flows. Even though the governments may not have had the best relationship over the last while, the fundamental truth is that Canada's second largest trading partner is China, with 120 million Canadian worth of trade. And there's a lot of cross-border financing or business activities that flow from that. I mentioned an example of a Chinese company going into North America for acquisitions. So there's a number of different flows that have just been ongoing. And so we have seen a very strong business environment. We're hoping, as Scott mentioned earlier, is if the government relations can improve, it facilitates even greater business interaction. And so we're certainly positioned well, I believe, in order to help clients, corporate clients, trade-driven financing needs. But also there's a lot of investment opportunity that travels both ways as well. We have Canadian investors who are looking for, as Alex said, for investments into Chinese opportunities. But we also have, because China is one of the largest institutional investors in the world, has huge flows of interest for North American securities. And then the complete solutions around that too, with FX solutions or risk mitigation or risk management strategies. So the business environment for cross-border flows in particular has been very strong. When it comes to local business activity, I think we've realized that we've struggled a little bit to be large enough and present enough to be a competition for some of the large Chinese banks. And so our focus has shifted a little bit more toward thinking about partnering with local institutions, like we have on the asset management side, to facilitate some of our corporate activity. And we're still in the development phases of that, but we have a lot of hope for that to also pan out as well.
Did I see the IPO market in Hong Kong, which has come to life after a couple of years of being quite slow? But it looked like a lot of the advisory services were being channeled into the Hong Kong subsidiaries of large Chinese banks. Am I right in that?
Yeah, absolutely.
So it's not
seen a
just
huge
BMO
resurgence.
small relative to Goldman Sachs. It's just that
the market.
The market is really shifting in terms of where the services are going.
Yeah, exactly.
Services.
The Hong Kong market has been a great conduit for global flows of investment into Chinese companies, in particular in the tech sector over the last while. I don't know the stats offhand, but like a multiple increase in IPOs and equity market performance this year.
It's interesting. On the risk management as it relates to currency, we put in place the renminbi exchange hub in Toronto years ago, but I haven't really thought about that. I don't know if you know anything about how that's developed, if at all, or what your client demands are with respect to exchange rate risk management.
Mm-hmm. Yeah, I think there was more hope for that renminbi hub to be a greater business driver over when it was first established than it actually has turned out to be. But it's still in place. There are certain clients who are taking advantage of it and financial institutions. I think more of the risk management has been done just on a bilateral basis within different financial institutions and corporate activity than necessarily driven by those bigger hubs.
It's interesting. I want to talk, I'll come back to you in a minute, Alex. I want to talk you to expand a bit about the renminbi, your ambitions on the renminbi side. And curious about if that's retail, China retail, or if that's even in discussion. I do know nothing about that, but it's an issue in North America about alternatives, getting access on the retail side into alternatives in the US, in Canada, and I'm curious about in China. But for Manulife Sinochem, these are all wealth management products in a sense. You've got the insurance side, the mutual fund side. How has this market been developing in the last couple of years? And what do you expect in terms of the growth as China ages? I would assume there's a significant upward growth in the savings for retirement side. And you're seeing it, I would imagine, on the insurance, on the mutual fund side, and other savings products. But I'd be interested in your view on where it is today, how it's changed, and where you think it's going.
Yeah, because I'm CEO of an insurance company, so maybe I more talk about from insurance perspective. But definitely, the insurance company, Manulife Sinochem insurance company, will be working very closely with our brother company, the mutual fund or asset management company, to provide a holistic solution for our customer. But I mostly talk about from life insurance perspective. I would say you can see that over the past years, from customer perspective, they are demanding more and more. They are no longer satisfied with only a pure insurance product, but they want a more holistic solution, the integration of insurance, asset management, and health protections. Especially, we think it's driven by the demographic change with more aging population, as well as the rising of middle class, which have more health awareness. So, for the traditional life product are more focused on the payment or affordabilities, which means that, for example, CI product, which means that when the insured are diagnosed of critical illness, the insurance company will pay a lump sum for them for the medical treatment. And for life product, which means that the insurance company will pay the family member a lump sum of money when the insured passed away to meet the future financial needs. That's great, that's helpful, but we think it's not enough because if insurance company take a more proactive way, like more interactive health management, provides this kind of interactive health management to our customer, it will be a win-win solution, which means that our customer will live healthy and longer. And from insurance perspective, which means that fewer claim or later claim. So it's a win-win solutions. So with this concept from Manulife and John Hancock, they launched this kind of behavior insurance 10 years ago in North America. They introduced lots of innovative health service to our customer, including early cancer detection, as well as better treatment for the customer who are diagnosed for critical illness. It's proved to be a very good success, and the customer are satisfied, and the insurance company, Manulife, we have statistics to prove that we can help our customer to live healthy and longer if they participate the program. We call it vitality programs. So inspired by this kind of concept, Manulife, MSL, we also want to borrow or copy the success in China. So we launched a similar program 7 or 8 years ago. We called it Move, which means that we want to provide a life cycle health service to our customer, including the medical treatment as well as early detection or education. So by this way, we combine the health service together with the insurance. So it's no longer traditional insurance, but we become their life partner. So which means that we provide not only the affordability or the cash for them, but also we provide the help they need when they are diagnosed disease. So this brings us, because we leverage the success of our parent company as well as the good success in other market. So this give MSL a very a competitive edge of our competitor, differentiate us to providing different product and service to our customer.
Yeah, it's interesting because China on payments, on integrated systems has done so much that the lessons are correctly moving out now. If I have a life insurance policy with you, and you tell me go for a jog and quit smoking, with your health integrated health, will you give me a discount on my insurance premium at that point?
Yes, we do have smoker and non-smoker.
All right, then I got motivation.
Yeah.
Alex, it's a live issue in North America, elsewhere, about retail access to alternative asset investments. So classically, your LPs are huge, and this is a way for retail to get access to it. So when you mentioned about I assume when you talked about the domestic renminbi market, that was partly what you were implying, or perhaps it's pension funds domestically in China getting access to it. But I'd be curious if you wouldn't mind expanding a bit about that and where you're at on your view on that in the years ahead.
Yeah, I'm actually glad that you asked this question because I think globally the retail money, which we call private wealth or semi-liquid channel, may change the landscape of the LP base for most of the private equity funds. I think we're actually at a tipping point. I think first of all, as a traditional PE firm, historically most of the LPs are institutional investors like pension funds, endowments, and sovereign wealth, and those are the large LP base for us. And I think starting a couple of years back, people start to realize that there's a lot of money hidden in the market, especially in the private banking, private wealth, in the network. So people started launching the retail channel, and including us. And we were shocked how much money, how much capital inflow is coming from that channel. And our infrastructure fund was the first one to explore that. And within a few months, we actually raised too much capital to deploy because there was a mismatch on the investment horizon with the liquidity. And i.e., we are a long-term investor, especially infrastructure. You hold assets for more than 10 years, but the private wealth channel, the money is highly liquid. Once they come in, you start counting the IRR, and they require some periodical liquidation to redeem the capital. So there's a mismatch, and but there's a lot of capital inflow. And we launched that through Morgan Stanley in the US, and the head of Morgan Stanley actually told us within a few years, we're gonna be your largest LP, and we're gonna demand different things. And I think everyone, at that moment, we realized this is probably a tipping point for that channel. And I think back to Asia. Asia is a big private wealth network. I think Singapore, Hong Kong, Dubai are the three largest locations. And we're actually launching the private capital channel for our private equity fundraising as well. I think for China, you have to distinguish between onshore and offshore. There's a lot of Chinese money sitting in Hong Kong and Singapore. They're looking for investment, and that's no different from the retail channel you see in the U.S. and Canadian market. But for onshore, it's still different from what you see offshore. So that's part of the question you had. Like, if we want to raise onshore RMB money, how do we manage that? How do we raise that? We're actually looking for CCBC to help us further deregulate that, because right now we are still focusing on the institutional investors, mostly insurance companies. And once we do that, we have to go to the retail channel. I think the retail channel is even bigger in China, because if you look at the stock market, 70 to 80% is still retail money, only 20% institutional money. That's the reverse of the US stock market. So the retail channel is even bigger in the onshore China market. One representative, one case study to illustrate this is the QDLP channel for Chinese money to invest overseas into private equity funds like us. And there was such huge demand once they opened it. And they not only benefit the higher return on the US dollar basis because of the interest rate gap, but also they benefit from the currency appreciation. So there's a huge demand. So the Chinese government have to hold it off until they figure out how to further deregulate this. And that just illustrates how much demand there is. And yeah, I think to your question, I don't think there's a clear channel for the onshore retail money for private equity funds like us yet, but we see it coming.
And I presume policymakers have an interest in trying to have something, because this traditionally, as I understand it, the real retail market in China is money market funds and hot, and it flows, and that flowed into the stock market a few months ago inside China. And so I'm sure the policymakers would like a slightly longer term horizon for retail investors as well. But it's a very different LP. Your classic LP is, I'll give it to you today, I'll give it back in 10 years. And the retail is very much not that. So it must be a bit of a challenge for the regulator above all else to figure out how to do this. That was a good example on the opening up the window for acquiring offshore, and there was a huge demand. Chris, I don't know, on reflecting on what we heard about the way the integration of health insurance and the lessons that are being learned here. I'm actually reminded of a story of a doctor in the United Kingdom born in Beijing, whose mother is still here, talking about the difference between the National Health Service in the UK and what her elderly mother was able to do here on her phone. Book an appointment the next day at 2 p.m., walk into the hospital, straight to the doctor's office, 5-minute visit, prescription written, get it filled right there, take a taxi home. So that's not how it works in the UK. It's not how it works in Canada. But are there that integration of that network? And there are lots of reasons why China can do it this way, we can't do it that way. But are there lessons you've seen on the banking side? It's a different world you're in, where there are things that you think BMO back home could apply inside its own systems in your time here in Asia.
I would definitely say that maybe stepping back 5 years or so, there was definitely more innovation and more of that technology-driven customer activity here in China than what we would have seen in North America. It feels like that North America has advanced over the last while in a lot of innovations. I even think of like our own personal banking interaction has become much more electronic and like immediate. And I think even corporate clients and everything are becoming much more so as well in North America. So I think that the tools and the immediacy of the financial services in North America has caught up to a certain extent. But the Chinese market is continuing to innovate. And so I think it kind of strikes all of us, and like BMO back in our headquarters is constantly thinking about how we continue to improve our technology. I think right now there are sectors or pockets of our financial services that are quite capable, but I think it's becoming more holistic, becomes even more important. Tying wealth and kind of retail banking and institutional banking together, because some users have all those needs, I think is be very important. And I think that the Chinese institutions are probably doing a better job of that right now.
Great. Any last comments before we go to coffee break? which is next on the agenda for 15 minutes, and then we'll reconvene here. But please join me in thanking our panelists for an enlightening discussion on financial services in Canada, China. And I believe, Bijan, we're back in here at 11:30. Is that right? At 11:30, please. Thanks.